All right, welcome back to Stock Tricks with Nick for this week's Midweek Movers live stream. If you saw the market today, you know that a lot of stocks were down on heavy volume, breaking support. The indexes, they gapped up at the beginning of the day, made it look like everything was back to normal, nice strong uptrend continuing. And then throughout the day, we moved lower and lower and lower. And at the end of the day, there was aggressive selling into the close on heavy volume. So typically, what I do in these live streams is we go over the general market, go over the indexes, some market leaders to just kind of get a gauge of the market health, and then we jump into 10 stocks that have breakout potential, things that are on my watch list or actionable list in the second half of the week. This time around, I don't have any stocks on my actionable list. I don't plan on trading on Thursday and Friday. Something drastic would have to change in the market, and even then, it's probably day one or day two of a potential bounce. We're in a low risk trading environment. So instead of going over just those like 10 stocks that have potential to break out or potential to trade, I just want to go through a list of all the past leaders and really break down like where in the chart did they start to struggle and then eventually rotate down. Because we've been seeing this for months now, where one by one, these previous market leaders hits a stall point and then fails. And typically that does happen. Some market leaders end up not being market leaders, and that still happens in a generally healthy market. But when you have that consistently growing the number of stocks under their 50-day, under their 200-day simple moving average, which we'll take a look at in a second, when you see that continuing to grow and you see the divergence between that and what the indexes are doing, that's when you know we're in a lower probability trading environment. You got to take the trades off a little bit quicker, nail down the profit, maybe trade with a little bit smaller position sizes. And now we're starting, well, hopefully not just the start, but going through a nice market flush. So with that said, if you guys enjoy the live stream, please leave a like. It helps YouTube push that out to new traders. And if you get anything out of this, subscribe. I usually have this live stream on Tuesday, pushed it to Wednesday, because I was hoping we'd have better market conditions to talk about. Did not happen. So usually a live stream Tuesday night, 7 p.m. Central, and then a breakout watch list on Sunday. All right, let me get to the charts. All right. This live stream is also sponsored by MarketSmith, which is the platform that we'll be using for all the charts. If you guys enjoy the platform, you can get your subscription in the link below. All right, first we'll start with S&P 500, SPY. Here, I'll close this down for now. You can see very strong uptrend up until the most recent, last Monday. We opened, pushed higher, and then closed on the low on this day. And you can see an uptick in volume here. And then we had a couple days sideways and then gap down Friday because Thursday market closed for Thanksgiving. Closed at the low of the day. Everyone was freaking out. Then on Monday, higher highs, higher lows, looking okay. Right under that, that is the 8-day exponential moving average. And then Tuesday closed at the low of the day. Today gapped up. Here, let me change this to like 15-minute candles. So looking at today, you can see we gapped up about 1.5% or so, and we just continued to sell off throughout the day and closed at the low of the day. That last 15 minutes was an aggressive sell-off going into the close there. So that's S&P 500. Let's check out Nasdaq. And then as I'm going through this list, if you guys have stocks that you want me to bring up on the screen and talk about, drop those in the comments. We'll get to as many charts as we can in an hour or so. If you guys don't have any requests, it'll probably be a little bit shorter of a live stream just because we're not breaking down every stock's fundamentals, potential buy points, stuff like that. We are really just covering past leaders and kind of the market health today. So Nasdaq, similar story, but kind of looks worse to me. Last Monday, same thing. We opened up, tried to push in the first hour or so, reversed lower, closed at the low of the day, right on the 8-day. Same thing on Tuesday and Wednesday, trying to get the days right because of Thanksgiving. And then on Friday, closed at the low of the day under that 21 EMA for the first time in a while, since like the follow through day, which was the 14th, I think. Yeah, 14th of October. And then nice day on Monday. Things looked great. We had market leaders, Matterport breaking out, heavy volume, good move on that. The market showed some strength on Monday. So I did put on a couple positions. On that day, it was about 30% invested. Had to cut all of those on Tuesday as we closed at the low of the day. And today, same story. Look at these volume bars on the selling days. All higher than the 50-day. This red line is the 50-day moving average for volume. And all of the pullbacks here have been on heavier volume than the 50-day. That is cause for concern. Another chart I wanted to check out was IWO. This chart really kind of shows what trading in 2021 has been as a swing trader, a breakout trader. Really nice move December, January, and at the beginning of February. This is IWO, so this is just the growth stocks. And that's typically what I trade anyway. So instead of looking at IWM, I usually focus on IWO as my gauge of small cap or growth stock strength. So where was I? February, we topped, and then look at how choppy this is. So unless you're putting on a majority of your exposure pretty quickly on those turnaround days and then riding a shorter term trend here, you probably had a tough time. I know I had a tough time. Something that I'm trying to learn to do better is really attacking those turnaround days with heavier exposure, so you can be profitable in a choppy environment, selling into strength and stuff like that. But chop zone finally looked like we were getting going here. We had the follow through day on the 14th. Where was that? Yeah, follow through the day on the 14th on the Nasdaq. IWO exploded higher. Everything was back to normal for breakout traders, feeling good going into the Santa Claus rally at the end of the year, and reverse lower. And now we're getting pretty close to the low in this base. I assume we'll find some short-term support, bounce a little bit because this is an aggressive sell-off here. But there's a chance that this is a failed base at the end of this. Maybe we find support and then we move higher. That's great if we do, but definitely a reason for caution here. And finally, ARKK, ARK Innovation ETF. Similar story, except we really didn't even get that run up. I guess, let's see. Yeah, a much smaller run up compared to IWO. And then when that turned around, you could see we built a little ledge. Trading under Leif Sereda's platform, he always talked about how when you're shorting stocks, you want to see the stock move under the 50-day moving average, build out a little ledge, because shorting, you have to take your profits quicker. You're not going to be able to get 100% down unless the entire world collapses, and then you're not worried about a short position anyway. But you want it to build out a little bit of a ledge here, and then you short as it breaks under that ledge or jumps off the ledge. And you saw that with ARK here. Jumped down, built a ledge, and now we jump down again. And we have that 97.22 is the low in the pullback in May. Have a little bit of trading around that area as well, but let me jump to the weekly chart on this. Yeah, that does not look good. Relative strength 22. All right. One chart I did a thread about was GMIAB on MarketSmith. So this takes a look at the NASDAQ, this middle line, or the middle bars, and then the advanced decline line, which measures the number of stocks that are up versus the number of stocks that are down. And you can kind of see how market breadth plays a role in your trading probability. If you have market breadth increasing, you have that advanced decline line advancing, then the number of stocks that are moving higher continues to go up. And when that happens, your win rate, your probability of the trade working out also increases. It just makes sense because when that's declining, there's fewer and fewer stocks moving up. So you have to, instead of choosing the 200 stocks that moved up, you might have to choose like the top 10 or something like that. So just thinking trading as probabilities, when your advanced decline line is going up, you're increasing your odds of being in a winning trading environment, a high probability trading environment. When that's coming back down, you're decreasing your odds, you're in a low probability trading environment. So, and this is a great graph to go with IWO with all that market shop. Basically, just wanted to point out in October, once we had that follow-through day, we did have a couple weeks where market breadth was increasing, advanced decline line was increasing. The Nasdaq itself was in a nice, strong uptrend. But the first time we had that test, what day is that? November 3rd or something, somewhere around there. The first time we pulled back on the Nasdaq, market breadth declined, and then we made a new high on the Nasdaq, but the advanced decline line never made a new high, which means the market was getting carried by the large liquid leaders like Tesla, Apple, Microsoft, Nvidia, and you're finding fewer and fewer setups. Roblox was breaking out, Matterport, a couple names like that were moving higher. But if you weren't in those names and you were trading a bunch of different trades, your winning percentage, your odds of being in a winning trade were getting lower and lower and lower, even while the market was either trading sideways or making new highs. So this is a great chart to take a look at to see how aggressive you want to be in your swing trading. And I just found this maybe a month ago or so. I wish I saw this earlier. I've always looked at like number of stocks under their 50-day versus the market, stuff like that. But I really like this advanced decline line. So as you can see here, market had been deteriorating since that November 4th kind of test of the uptrend. And we're finally starting to see the indexes feel that pain. The large liquid leaders feel that pain. And let's go through a couple of their charts. So Apple had been just the monster, completely ignoring the pullbacks recently. So we had this nice cup, little handle here, and then we broke out on heavy volume. So this was a great sign from Apple. Institutions maybe taking positions. I assume with that type of volume all over their 50-day moving average. Really nice breakout. Checked back to that 8 EMA and then pushed higher. And even today, it was up 3% at one point, but this kind of broke. This was the kind of, I don't know this to be true, but if this is a blow off top where the final name gets extended and then reverses, closing at the low of the day on heavier volume. So this is the first down day that's had that heavy volume. Definitely a time to be cautious. But this has been one of the stocks that have been holding up the entire market while that market breadth declines. Microsoft, similar story, really nice uptrend in here. So on the November 4th is when we had that market test where the Nasdaq pulled back, or right around there, we pulled back, and then you saw market breadth decline. So the number of stocks participating in the rally declined, and Microsoft continued higher. So that's why the indexes were continuing higher. This is one of the largest stocks. If not, this actually might be the largest stock market cap wise. I think I read that. But since Monday, this got out, reversed lower, closed at the low of the day, mirror image of the Nasdaq. And then really, really ugly bars Friday, Tuesday, and today, Wednesday. And look at the volume all over the 50-day moving average, all closing at the low of the day and under the 21 EMA now. That was Microsoft. Let's go Amazon. A little bit of a cup here, but a really nice pivot to work with, and that broke out on that pivot while a lot of the growth stocks were pulling back, market breadth decreasing. You saw one more day where it continued higher, but then started reversing, and now closing at the low of the day, under the 8, under the 21, and we're approaching that 50-day simple moving average now. What else? Facebook really never got going too much. Got over the 50-day moving average for a little bit, checked back, and then reversed lower. Now closing at the low of the day, we're under the 200-day simple moving average for Facebook. I don't trade any stocks under their 50-day, under their 200-day. So this can pull back as long as it wants. Until it gets back over that 50-day, I'm not interested in trading it. And then we have Tesla. This is another one that is holding up extremely well compared to the general market. So if Tesla can find support on this 21 EMA, this pink line here, and then tighten up and then press higher, that would give the market much more strength. But the fact is, we took out yesterday's high. Things were looking bullish. We gapped up. The Nasdaq gapped up. S&P 500 gapped up. But then We reversed, closed at the low of the day. The only kind of positive with this kind of action is it came on less than average volume, less than the average 50-day volume, about 51% of the average volume. So less volume, likely not as many institutions liquidating positions as some of the names that we'll cover here in a second. All right, I covered Tesla, Facebook, Amazon, NVIDIA. That's the last one. All right, so NVIDIA, similar story to Tesla, holding up the best along with Apple and Microsoft, all the large liquid leaders. Again, the number of stocks participating in the rally got less and less and less and less until we started rolling over here. So NVIDIA, did that also make a new high today? Let's check. No, not a new high compared to yesterday, but it was above yesterday's close at some point. Reversed lower, closed at the low of the day on above average volume. We're under the 8-day exponential moving average now. We have the 21 EMA. Let's see, 21 EMA is at 302. So we're 4% above that right now. That would be a logical place to potentially find some support, get that gap to be closed, and then buyer step in on the 21. That would be awesome. That would keep the market up a little bit. So those were the large liquid leaders. That was kind of the check on market health. Now let's go through some past leaders to really see where in the chart did this break down. So when we're looking at other charts that we're trading and we see something similar, we can take the exposure off, take a look at some different names. And I see PayPal in the chat. Let's start with that one because it was on my list anyway, and we'll cover it. So basically, the main thing that I want to drill home here is the 50-day moving average. If you close under the 50-day moving average on heavier than average volume, that is a red flag for me. If I have a position like that and it hasn't hit my stop, like maybe my stop's lower than that, I'll at least take half that position off. If we continue lower the next day, I'll just take it off. You can always buy a stock back higher. Sure, you missed out on a little bit of the price appreciation bouncing under the 50-day moving average. But as we're going to cover here, avoiding or missing out on those $5 or whatever that it cost you to get back into the stock above the 50-day moving average versus the amount of money and time opportunity that you would have lost by staying in a stock, declining under the 50-day moving average for months on end versus all the opportunities that you had with other stocks along the way is something that we want to really drill down so we don't make those mistakes again. So PayPal, kind of crossing through the 50-day moving average line. That's the red line here. We broke that on heavy volume, came up, tested it, reversed lower. So still not a stock that we want to look for. Then we finally got over that. That could have been a potential buy area through here, but you could see it never really lasted for too long, maybe a month or so. And you would have had an opportunity to move your stop to even to take the risk out of the trade there. So we pull back, undercut the 50-day, bounce one day, still on the 7th, doesn't close over the 50-day moving average, moves lower, and then again we break over, set a nice pivot, and then this right through here is buyable, and you have a time to move your stop. Now I think, this is an earnings gap down, not a great sign anyway. We have followed through on the downside on heavier than average volume, under the 50-day moving average, and that's gone. I'm not trading that stock. I'm getting stopped out or I'm taking the position off. Trade sideways for a little bit, bounces over, but never creates like a really clean pivot to work with. And then since, when was the last day? First time it closed under the 50-day was September 10th, and from there, just lower, bounced, tested it, never got over, never created a pivot over the 50-day moving average, and then reversed lower, gap down, quick bounce to the 8-day, lower, trade sideways, lower. So really, you would have had one trade here, either been stopped at even or profitable on here because that's still below your entry point. And then you're out of the trade, right? So that's PayPal. Let's go CrowdStrike. So similar mess in March, April. Where was This looked like it was rolling over in August, had nice earnings, popped on earnings, got back over the 50-day simple moving average, but came under, came under the 50. You saw a little bit support there, then dropped under, broke over, heavier volume. Breaking over the 50-day moving average on heavier than average volume, that's a good sign. Then it kind of comes back into play as a potential trade. This was a nice area to kind of trade against. I might have actually even taken this trade and got stopped out 3%, 5%, something like that in here. But then we break the 50-day moving average on extremely heavy volume, as you can see here on this day, closed well under. We bounced, closed one day over the 50-day, reversed lower, and since then we're under the 200-day simple moving average now, and not a stock that we want to be trading. Again, look at the volume, heavier volume on those down days versus up days. And once you broke that 50-day, it became a much riskier trade. Next, we have Afrm. This was, I think, the first trade that I put on October. Afrm or AEHR. I always get these two mixed up, which one I traded. But I traded one of these as my first trade to get back into the market in October after the correction. Because it gave, I think it was this one, really nice flag through here. Found support on the 21 EMA, then broke out on super heavy volume, really easy trend. Really not closing under the 8-day much up until here. But you can see these daily bars get sporadic. You have a squat day and then earnings. We squatted, reversed well lower. Earnings popped it up. We ran it, but still closed super low on that day. So how are you trading this stock with a 3%, 5% stop and not getting stopped out with normal volatility? When you see those daily bars really expand and the volume spiking, unless you're using an intraday stop, and even then, you're likely to get stopped out with the increased volatility. And that's why we always want the chart to get quiet, volume to get quiet before we put on a large position, because this was all over the place. But then when we broke that 50-day, it was on less volume, but still broke the 50-day, bounced back up, and now we reversed lower at basically the previous breakout point now. So if I just held the stock, never sold any into strength, I'd be even after 2 months now. Snow is on the list. We'll get to that in a second. AEHR, just because I mentioned it before, just recently broke the 50-day moving average on less than average volume. So that's one good sign. We trade sideways a little bit, build that ledge out, and then jump off the ledge, closing at the low of the day today, down 12%. Not much good can happen under the 50-day moving average. Let's go snow. Today, or I guess yesterday, closed just under the 50-day. If it's a really close close, like just right at the 50-day, and I have a large profit and the market's cooperating, it's not melting down like it is right now, then I might give it that room just because I got in lower, have profit to work with. So depending on where you got in the trade with snow, this one day in a different market context isn't a huge red flag. But you count the large down days on heavy volume, 1, 2, 3. That's your third one since the short-term top at around number 400. And I mean, this didn't even get going really today compared to the market gapping up. What was this? From 340 to 3, up like 1%. And then reverse lower, closed at the low of the day, heavy volume, not something that we want to take a look at. Got DLO. Snow's plus 50 after hours, that's good. DLO, this was a stock that I traded in, is it August? Yeah, August, looking really good. But once it broke that 50-day, it bounced and rolled under, and now from $60 to $30, a 50% decline if I just stuck with it because it had incredible fundamentals. I mean, look, the only thing that's going to pay you in the stock market is price. If you look at fundamentals and trade just based on fundamentals, unless you're a super long-term investor, and have that patience to take 50% drawdowns and miss out on other good opportunities. I can't do that. Maybe you can, that's great. But look at this, 300%, 500%, 100%, 100% earnings per share growth year over year. Sales up 94, 124, 186, 123 year over year. After-tax profit margin increasing by 30 to 42%. Fundamentally, you look at this and you're like, this is an all-star. I want all my money in this. And then you look at the chart, it breaks the 50-day at, breaks the 50-day at $57. Now it's at $30. You've lost 50% of your trade because you didn't put a stop or because you're trading stocks under the 50-day. And you've lost all this time where other stocks were breaking out. Also with good fundamentals. You can find good fundamentals in other stocks that were working. And if you can't, that's not a market you should be trading in anyway. That's DLO. MELI, similar story. We broke the 50, tested it. Broke the 50 down here. Came up, tested it in November, and then just reversed lower. Nothing you want to be involved in, especially under the 200-day simple moving average. Massive selling volume here. This is going to take another base. It's going to have to create a base and then finally get going. Something that Oliver Kella is talking about in his seminar with Trader Lion is if it's going to be a market leader, if it's going to be one of the strongest stocks in the market, it's going to be back over its 200-day moving average, it's going to be back over its 50-day, and it's going to make a new high. So until that happens, until we base out and get over those key moving averages, don't want to be a part of it. It's MELI. Next we have SE, C Limited. This was a stock that I was holding in my kind of longer term portfolio, which I have a very small amount of money that I put off trying to learn to hold some positions longer. And I got in on this breakout. I also got in on my swing trading portfolio on this day. And I just sold this, what day was this? The 16th, when we broke the 50-day. It did break the 50-day earlier, but I had a little bit of profit and the market wasn't a mess yet. We were still holding up. So I wanted to keep the position on for a little bit, got over, but then we broke and closed under that area. So I sold on this day. And then look, under the 50-day, wreck, a little bounce, more wreckage, heavy volume. We're under the 200-day moving average. Not something I want to be a part of right now. I really sound like a negative Nancy going over this, but I do want to go over how these charts fall apart, how they get into these stage 4 declines, because a lot of us, I don't know who's in the chat, but a lot of people just started trading in 2020. They've been rewarded every time they buy the dip, buy the dip, buy the dip, and that works until it doesn't. And if you don't have selling rules, don't have ways to manage your risk, it doesn't matter how many trades you get right in a row. That one last trade that you don't cut your loss on, that can ruin your entire year and set you back mentally too, because then you're coming in kind of mentally wrecked after making a decision like that. So cutting those losses quickly and identifying when a stock is kind of topping out and then going into that stage 4 decline is a great way to keep your mind right and your account right. All right, let me see some of these questions. Seems like all the market leaders showed relative strength on the market today. Most of the stocks on stage 4 declines currently. Yeah, the only ones that I really saw kind of trying to buck the trend was Apple, down only a little bit, but that was not the greatest move. If you have the market leaders that you want to throw in the chat that we'll go over, who posted that? Kitsai. Sorry if I mispronounced that. Go ahead and do that, and we'll take a look at those, because I would love to look at some relative strength stocks today, too. I don't want to be negative all live stream. Covered Snow, TWLO, Twilio. This was one that went kind of early. So first broke that 50-day in March, got back over it. This has kind of been all over the place, but not a great example. Let me move on from that. Upstart. This broke it on earnings, but already declined from 400 to 300, so a 33% decline. You would have been stopped out at some point, I would hope. And then built out a base through here. You probably sold on that move, on the break under there, unless you were a position trader, had to position much earlier. That's a different strategy. I'm a swing trader. That's what I'm talking about today. Not not trying to hold for these massive moves. That's Upstart. Dutch Bros, I was super bullish on this. I look out of my apartment and I see people at Dutch Bros right now, and even like at 9 p.m., there's 20 people in line. Seems like a great business. Definitely has the earnings, plus 900, plus 400, plus 75. Had a nice run up, made a lot of money on the name, but once it came out of favor, you have to cut your loss, because no matter how good the business is, it's not good stock unless it's going up. Yeah, I try to trade like into one of the bounces here. That was my last trade, and then it got under the 21 EMA. And for an IPO, not something I want to be looking at really. App, same thing. This looked like it was going to be a market leader. Popped on earnings and then faded, and then today built out a little ledge right on the 50-day moving average, and then jumped off, closed at the low. Or did I? Apps, APPS is another good example. Malfunction bar on the earnings, built out that ledge just under the 50-day moving average, and then a potential short is when you break under that area. That would be $74 to $50, so a 33% decline there. And net, first time breaking the 50-day on heavier volume, closing at the low of the day. This was an absolute monster of a move. Kind of a hard trade to take unless you just bought just with a break of the new high. And now we got to see, does that instantly get supported? Do we get back over the 50-day, kind of build a base out above there? If so, then it's a stock that we can trade. It does have 98 relative strength. That's great, but this action, strong selling, heavier than average volume, a little bounce, and then more selling. All right, so those were kind of like past leaders that I wanted to cover. Let me jump to the chat to see what you guys are saying. Market price tells everything. Absolutely. Let's take a look at MVIS. Yeah, I would have to check my trading log, but I have traded this in the past. I forget where, and I don't want to say, I can see on the chart where I would want to trade it now, but yeah, once we break that 50-day, let's see, June 30th, we get a bounce up test. We build out a little ledge here. That could have been a potential trade. A little bit early in that pullback, going from 24 to 12, that's a 50% pullback. When you're buying lower in the base on a 50% pullback, just your probability of that trade working out is lower. Chances are you need to build out that base a little bit more. Tesla was a great example of that when you had that steep decline. And I mean, even that 900 to 540, I can't do that math in my head. I think it was 40%. It was exactly 40%. You see all these kind of bounces, then retest, bounce, retest. So the lower in the base that you're buying after a decline like 50%, where you're actually in a base, the lower probability of that trade. So going back to, what stock was it? MVIS. Going back to MVIS, after a 50% decline, you have that bounce to the 50, a little break over. We closed over it one day, had a pivot to work with, but just know that's a lower probability trade. And then you get stopped out the next day, closing low of the day on the 50, under the 50, and then you just decline from 15 to, what is that now, 7? Another 50% from there. So can stocks go lower? Yes, the stocks can go lower. Do stocks have to go up? No, the stocks don't have to go up. Should you always buy the dip? No, you shouldn't always buy the dip. Risk management always comes first. It's not flashy. It's not sexy. It doesn't get the most subscribers, but it's going to keep you around the longest. And when we're playing, compounding our capital, that game, the more time that we have on our side and the larger of a trading edge that we have, the better we're going to do over the long run. It's not about one trade. It's about what you can do as a trader over your career. So that's why, that's another reason why I have no problems cutting losses pretty quickly, because I know if it's a loss that I take quickly, I'm not going to remember this trade. Like I'm showing the MVIS. I'm sure maybe I took a trade in here that I took a loss on. But because the loss wasn't very large, because I cut my losers quick, I don't even think about that. And that another thing to keep your mental game sharp. Cut your losers quick, and then you don't have that emotional attachment to the stock that then just goes into that stage 4 decline, and you're down 24, 7, what, down 66%, and all that wasted time where you could have been in other stocks holding up well. Vuzi, let's check that. Yeah, similar story under that 50-day. And if it's above the 50-day and under the 200-day moving average, I still don't like to trade that. If there's a massive volume breakout, like a change in character, maybe then. But to me, I've still had issues with that. So unless a stock is over the 50-day and over the 200-day, I don't like to trade them. Let's see. If you were forced to guess, what % chance do you think we have a correction? I like that you said % guess, because that's how you should be thinking. You should be thinking in probabilities. There's no absolutes in trading, and that's why it's so important to cut your losses quickly. I'll keep drilling that home. Let's go back to the QQQ. So we are just under the 21 EMA. We did Friday, closed above it Monday, Tuesday, and then today on heavier than average volume. There is this area where the 50-day moving average is coming up, and it was a previous resistance area. So the 383 area on QQQ, I would love for buyers to step in, support that area, and then we start to focus on the stocks that are showing relative strength, and those are the names that we want to be trading. And I'm totally open to that possibility. And I think it's important to stay open to any possibility in the market right now. But I would rather be completely open to any possibility and in cash at this point than be completely open to this any possibility and not have any stops and be 100% invested when I'm looking at a chart like this. So correction, I would say are you saying correction is 10%? I'm thinking we're already basically in a correction. I'll be looking for a follow-through day to kind of ramp up my trading. But if I have to guess, I don't even want to. If I was forced to guess, I would go maybe 50-50 that we break under this 50-day moving average and the market actually goes into a bear market. But I don't like I said, I don't want to give that idea too much strength because I want to be open to what the market tells me. If we start to see heavy volume breakouts in market leaders, the indexes getting supported, and then market breadth, advanced decline lines start going up, I'm going to be starting to trade. And I want to be completely mentally ready for that as well. So trying to put any absolutes in the market is not something that I want to be doing. But I appreciate that you said what % chance. All right. ON. Yeah, this is one that is still showing good relative strength. This is one that has great fundamentals, so if you need both of those, definitely a name that I've had on my breakout watch list that I post on Sunday mornings a couple times through here. Still right at the 8-day exponential moving average, not even tested the 21 like the market. So it's showing that relative strength. It's not pulling back as much. And the volume on those pullbacks are all under the 50-day moving average except for the 23rd. So for relative strength, we're looking for stocks completely bucking the downtrend, making higher highs versus the market making lower lows. That would be ideal. Not seeing that too much, but also stocks pulling back to shorter duration moving averages, the 8-day, 10-day, whatever you have on your chart, compared to the 21-day EMA, 20-day EMA, anything like that, versus the 50-day versus the 200-day. So stocks that are pulling back to the 8-day, like ON, showing relative strength. We also want to be looking for low volume pullbacks. If we're seeing heavy volume selling and we're breaking key moving averages, that's more likely institutions liquidating their positions versus just me and you selling. Me and you selling doesn't have much impact on the market, depending on who I'm talking to in this live stream. But I know personally, I'm not moving the market. My volume's not showing up on here. So if we're seeing light volume pullbacks, that's more day traders, swing traders, me and you, taking profits, taking a risk off the table while the market's kind of shaky. And then something that we can kind of keep in our mind, the stock showing relative strength, it's above key moving averages, and it's not likely that institutions are liquidating positions. If the market does firm up and then break higher, that's a name that we want to focus on. So great throwing that in the chat. Who was that? Elizabeth, thank you. Wanted to cover a couple of like more recent market leaders and their actions today as well, but keep throwing stocks in the chat. We'll go through as many charts. We got 20 more minutes. LAC, this is a trade that I messed up over and over and over again. So, it was a perfect trade through here, and I didn't take it. It came in, had a nice pivot in here, didn't take it. Broke out here, didn't take. I just never took this trade, and it was a really solid setup every single time. Didn't have any fundamentals to go with, but the volume of heavy volume breakouts, low volume pullbacks, that was showing it was getting accumulated. Let's check fund ownership on here. Yeah, you can see the stock was getting accumulated, going from 49 to 102 funds. Great to see that. But yesterday we stalled out a little bit, made a new high, but then closed in the lower half of the daily range. And then today, actually we gapped down. This was the one stock that while the market gapped up, this was actually gapping down, which was very concerning. And then it closed at the low of the day, cut through its 8-day EMA down 12%, 11%. Lucid, this was a stock that I traded today, got a 25% position size on it using a 1% stop. It went up 5%. I sold half into that move and then got stopped out in the money on the other half. It was a really good trade. I'm proud of the way I handled the price action today on this one. And this was one that we go back. When the market gets rough, we look for relative strength, so we're prepared if the market starts to firm up. This heavy volume breakout, low volume pullback to a short duration moving average, breakout, short duration moving average, breakout, and then as the Nasdaq, as the S&P 500, we're closing under the 21 EMA. This stock wasn't even closing under the 8-day EMA. Continue to close above that. Nice move on Monday. I did trade it on Monday, took the trade off on Tuesday, put another one on today, sold it into strength, made a little bit of money, like 0.5% of my portfolio, whatever. But then even this reversed, and now we've closed under the 8-day for the first time. Still basically average volume. So if the market firms up, this is another name I do want to come back to. I don't think this chart is completely wrecked, but look at those daily bars, how when it pulled back and got light on volume, those daily bars got tight, and then your probability for the trade increased because you had that tight range. People were not as interested, disagreeing over the price. Supply and demand came to a standstill, and then you had a breakout on heavy volume, and that's how it was going up through here. But then once we peaked, you saw these very large daily bars, very large volume, and unless you're selling to strength pretty quickly, protecting your stop, still a low probability trading environment overall. But this was the name that you wanted to focus on if you were trading today. Well, and Matterport, another good one. This is one that I traded on Monday. I sold everything on Tuesday, so a little frustrated to see it go today. It was up 16% at one point in the day, and then closed down 3.7%. That's a 20% move. And on heavier volume, this is another one, still above its 8-day exponential moving average. Give this some time to firm up. Definitely a stock that I want to keep on a pretty tight, focused watch list. Because when the market was right in the morning, this was off to the races and only pulled back as the market pulled back. So Matterport, MTTR, something that we want to keep an eye on. I covered NVIDIA and Tesla earlier. EMPH, this was a stock that I put a large position on yesterday. I had that spotlight stock of the night that I put out on Monday. This is my main focus going into Tuesday. I had a position from Monday, bought as it broke over that 249 area, and then the second it broke 249, and the second I bought, it reversed. I took the trade off because we're not in a high probability trading environment, trying to keep my losses as small as possible, especially with the position size I put on, which it was large for me, large for what I was comfortable with, so I was quick to take that risk off. And then today we saw it roll over and close under the 21 EMA for the first time since this power earnings gap. That's not a good sign for another market leader, a true market leader, great fundamentals, great earnings, popped on earnings, heavy volume, had post-earnings drift, all good things. And now this is rolling over, closing under the 21 EMA. But look at this, on a little bit less than average volume, one good thing. So another name that I'd keep on a general watch list, but needs some time. AMD breaking the 8-day exponential moving average on slightly above average volume, closing at the low of the day today. Let's see how that handles the 21 EMA. TTD, a trade that I took yesterday, had this nice 2-day pivot, bought that, and then got stopped out for a 2% loss. But 2% loss, I'll take that because I think it got stopped out, I don't know, 104.99 I think it was, something like that. And then today, lower highs, lower lows, only gapped up like 1% or so, and then cut through the low of the day. And that's your stop if you're still in. And then now we close under the 21 EMA. Still slightly less than average volume. Good to see. But one thing that I should have looked at was on Monday on this inside candle, less volume. TTD was looking really good, but needs some work now. Roblox, similar story to Matterport, now closing under the 8-day exponential moving average. So Matterport or Roblox, I would err on the side of Matterport. That's a little bit stronger as of now. Bounced right on the 21 EMA and a previous breakout point. So that's an area to watch right around 110. Keep that area in mind for Roblox. Let's go U, another metaverse theme. Nice tightening area, breakout, and then this candle was earnings, follow through higher, and then we just bear flag. I put this on the breakout watch list, and I said this could be a bear flag through here. It got out, reversed lower, under the 21, inside candle yesterday, and then just, what was this down today? 12%. 12% under the 50-day moving average on heavier than average volume. So that's our warning sign. Don't want to be holding this right now. Let it find support. Usually if something drops 12% on heavier than average volume, closing under the 50-day moving average, you might get a bounce or something. But unless you're a day trader, like, do you really want to take that trade on knowing that it's, one, the market conditions aren't right, it's a low probability trading environment, two, the stock's under the 50-day right now, sold off on heavy volume, so that creates a lower probability trading, and then you just have to take your profits quicker. It's not likely to be just a bounce and then a V recovery from 160 back to 200. You're likely going to have to put in a base, which is going to take a couple weeks. Now, anything can happen in the market. V-shape, go ahead. But thinking probability-wise, something that we want to avoid now. ZIM holding up relatively well. I did take this off my longer-term portfolio today just because I really want to be careful in this market. I don't think there's a lot of opportunities at this point. Better safe than sorry. I would rather miss the first couple of days of a move and then get back in versus watching my stocks decline 10, 15%. Or if this is truly the start of a bear market, I have no idea if it is. I would rather be in cash at the start of that, right? So, but this one is holding up pretty well. We got the 8 and the 21 right around the same price. We closed above the 21, under the 8 today. Volume right at the 50-day moving average. Not a terrible chart. Want to keep on a watch list. And the last one I had 3 more wanted to cover, sorry. XPEV. This was on the breakout watch list as well. Wanted it to tighten up. It didn't. It just kind of jumped on Monday. Nice follow through on Tuesday. This was incredible relative strength on Tuesday when the market closed at the low of the day or near the low of the day. No, I think it was the low of the day. XPEV was up 7% that day on heavier volume, breaking out from a nice base. So I was like, if I can find my way into this name and when the market firms up, that's exactly what I want to be targeting. Unfortunately, today, this is what I mean. One by one, these market leaders or what's in favor are falling out of favor. Indexes are starting to roll over. Today, down 7%, closing under the 8-day EMA on heavier than average volume. At some point, when institutions are liquidating positions, they are selling everything. Some crypto-related ones, MARA. That one completely declined. I think this was down 27% in one day. I got stopped on this day when it took out the low of the previous day. Since then, we bounced at the 50-day, but you can see today we still closed right on the 50-day. Let that build out a little bit of time. SI, similar story, good relative strength, but look at how high up these daily bars go. Very low probability that you're going to get in that trade and not get shaken out with normal volatility at this rate. And Coinbase, pretty ugly action today. Tuesday looked really good because Monday everything was bouncing, right? All the market leaders were getting out on decent volume, closing near the high of the day. I said it was potentially a day one of a new uptrend. Tuesday, we went over that high and then just reversed lower, closed in the lower half near the low of the day. And then today, same thing. We bounced higher, or we opened higher and then pulled back. Lighter than average volume, but still under 300. That's a round number. And right on the 50-day moving average. Let's see if support is found there. But I'm not looking to support the stock here. I'm looking for other people to be brave, to buy the stock, allow the market to tighten up, and then maybe this can be something that we want to trade. It's definitely the theme that I want to focus on if the market does get healthy again, but not right now. I'll let someone else buy, and then I would rather buy back up in the 320 range with a higher probability versus trying to nail the low and be like the first one back in the pool. This looks good that it stopped on the 50-day, but bad overall. I mean, you have a couple things, 50-day and then a couple previous highs through there. So maybe an area to manage your risk if you're good at buying the pullbacks. I'm a much better breakout trader than pullback buy trader, so not something that I'm going to be trading, but I guess there's a way you can manage your risk against that. I still think it's a lower probability. All right, those were all the stocks that I wanted to cover. We got 8 minutes to go. Let's see what you want to see. Minervini just posted a tweet 3 hours ago with two interesting pictures. Yeah, the 1987 one. I saw that one too. And that's a possibility. Like, it's a possibility that today was the low. It's a possibility that the market crashes, right? With knowing that and knowing that we're in a low probability trading environment at this point, I would rather be in 100% cash or maybe even a little short than have a bunch of positions long that I'm just like buying the dip on. Because again, trading is just probabilities, no absolutes. Could it be 1987? Could we open down 5% tomorrow? Sure. I've never seen that. Well, I guess I saw that during the COVID crash, but outside of that, I haven't seen that before. Could it happen? Sure. Could we find the low today? Was today the low? And then we start building? Sure. And I think Minervini talked about that too. He doesn't know when things are going to end, but he wants probability on his side. He's waiting for the market to tighten up, some leaders to get back over moving averages, and those heavy volume selling to stop before he starts getting back in the market. I don't want to speak for him, but reading his books, following him on Twitter, he's definitely one to follow when it comes to managing risk. And he is cash at this point, so maybe even short. Yeah, he said he's short SPY. So let's see. High liquid stocks would make sense to trade. However, ATR can be very high after today. Yeah, and that's what I would go back to, Robbie, is those daily bars are so volatile right now. If you're a low risk trader like myself, where I'm looking for a 3% stop, 2-3% stop, typically 5% stop at the loosest, chances are I get stopped out with normal fluctuations before the uptrend starts. And do you just want to take those paper cuts, or would you rather sit out, not take those mental paper cuts as well, which can impact your performance, and then when the market's actually firmed up and ready to move, you're mentally kind of beat up a little bit. I would rather sit on the sidelines now, read some good books. I got Trading in the Zone, Mark Douglas, working my way through that. I would rather go to the Oliver Kell seminar, take a bunch of notes, build up my mental capital, and then when the market's right, then attack with full capital and full mental capital. So with ATR super high, I am trying to trade as little as possible. DAC, this is similar to Zim. I'm not sure if DAC owns ZIM or the other way around. I know Leif pointed that out on Twitter, but this is kind of a scary chart, closed under the 200-day moving average. This is a kind of a base here, and then we have a base failure. Not something that I'm looking for. You're seeing volume pick up as we start to the decline, that waterfall here. Yeah, not something that I want to be trading. DAC, Wire. Wire is solid. Definitely a thinner traded name, 245,000 shares traded, the average 50-day. Great earnings per share, 100, over 1,000, 700. Sales good, after-tax margin good, relative strength good, fund ownership kind of petering out at that 420 area. Within the group, strongest on earnings per share, third on relative strength, number one on accumulation distribution, number one composite overall in the group, and it's a relatively strong group. So this is, we're putting all the pieces together. This is a stock showing good relative strength, above key moving averages, only have pulled back, had 3 above average pullback days. I mean, it seems like this had a change in character where volume was dead through here, and now we're going to see some larger volume anyway. But this is a great one to keep on a watch list. Thanks for pointing that out. AMD, yeah, we covered that. PSTG, Pure Storage, got the cup handle, trying to break out, but the market's not cooperating, but good one to keep on the watch list. Let's see, strongest earnings per share, relative strength, second on accumulation distribution, number one overall composite out of the 10 stocks that make up that group. Fund ownership on that, kind of petering out a little bit. Average daily volume, 3 million, that's liquid enough. BAC, oof, yeah, even financials are starting to feel this. You drop down to 50-day, it got supported. Same thing, couple days, just building out that ledge, and then jumped today. Heavier volume the last 4 trading days, all closing lower, and a very ugly close today. Under the 50-day, you do have potential support, basically right at where it's at. No moving averages, but a previous resistance area. But I would rather someone else support it, build out a little bit of a base, build out a pivot to trade against, and then trade it. I'm terrible at buying the lows, so not worried about doing that. In this hard penny market, I'm afraid of death by 1,000 cuts. Absolutely. If you feel the need to trade that much, you could always paper trade too. Get some confidence in that, see a couple of your paper trades working out, and then get back into the market. But again, I'll go back to GMIAB. I love this chart on MarketSmith. It is awesome. Look at this advanced decline line and try to tell me that this is a higher probability trading environment. With this many stocks participating, I mean, the market is just starting to roll over here, but underneath the hood, absolute carnage. So are you going to be able to buy those 1 to 5 stocks that are holding up well, the Nvidias, Tesla? Maybe, but you have to be laser focused on relative strength over the next couple days, next week or so, and then only trade those very, very select few names. And even then, it's still a lower probability trading environment, because when you have that divergence of stocks participating in the rally versus where the market's at on the chart, when that divergence gets wider, it doesn't stay wide forever. And ideally, now money goes from the large liquid leaders to growth stocks. But as we're seeing more fear in the market, chances are it's going to be the other way around, where we pull back more until we base out. We have those leaders go through a new base and then start to break out. So I don't see any more chart requests. We're right at an hour. Thank you guys so much for showing up. I know this wasn't the most fun live stream. I tried to push this off to Wednesday to see if the market would improve at all. Unfortunately, got even worse. But just know yourself, know your risk management, know how much you're willing to risk, know that this is a lower probability trading environment, and understand that the number of stocks that are holding up well is getting worse and worse and worse. The markets are just starting to roll over. Sure, all the headlines are coming out now, but the market was begging for a headline to pull back, to flush out. Because we've had the Delta headlines, we've had inflation headlines. Did anyone believe it was transitory? No, until Powell said that. So the headlines that are coming out now are basically the market's excuse to finally flush. And until we see some market leaders breaking out, until we see the volatility on those daily bars get tighter and tighter where we can manage our risk, ATR pulling back, tightening up, I would rather be in cash. I would rather miss out on names breaking out than try, like you said, death by 1,000 cuts. So with that said, that's going to be the watch list. I'm going to put together a breakout watch list on Sunday just for the YouTube algorithm, maybe 10 stocks with relative strength that I wanted to keep on the watch list. But to be honest, I would rather be patient at this point. Anyway, thank you so much for coming to the live stream. Hope you guys enjoyed it. Please hit the like button. Share this with any other traders if you enjoyed it, got anything out of it. And please subscribe. It helps me out tremendously. We're so close to 6,000 subs. That's the goal by the end of the year. I think we have like 50 more to go. So help me get there if I helped you out today. Take care. Oh, thank you, Elizabeth. I appreciate that.